I think emerging markets is the future. They have the people and faster growth, and increasingly they direct their efforts in a very intelligent way. China in particular is cranking out their percentage of people taking engineering and hard science. So they're now, in total, a much bigger country, but in total, massively outproducing the US in the number of engineers and scientists. And as that goes on, it makes it difficult for them not to take the lead in one area after another in science. And they are dedicating their resources to artificial intelligence. They've already dominated the green energy, wind and solar, in terms of manufacturing and installation. So they're becoming formidable competition. And India too, the fastest growing country in the world, that's now taking up the mantle of China. The developed world with its miserable growth rates has to compare with India growing at over 6% a year.
And on the topic of China, given those huge leaps, as you mentioned, it's made in science and innovation, is it now inevitable that it will one day be bigger than the US economy, or not?
Yes, completely inevitable. But what I should add about emerging is, in the end, after all these conversations, it always comes down to price. And they're always on average, they're a bit cheaper. They are much cheaper than normal. And their currencies are also cheaper than normal. I'm a great believer in the crude economist judge of inflation, the Big Mac index, as comparing quite effectively. It was a joke to start with, but 40 years later, it has 40 years of data and 60, 80 countries. And I think it's a pretty decent general idea of inflation and the currency comparative value. And we have very fancy currency comparisons in our firm and 1,000 other firms too. But I wouldn't hold my breath. I think the Big Mac index, the cost of buying a Big Mac and French fries in all the countries of the world, I wouldn't bet against that beating it. And what that says is it's always been 25% cheaper to buy a Big Mac in an emerging country, but now it's half price. And that movement back from 50 cents to 75% is a 50% move.
You mentioned that it's inevitable you think that the Chinese economy will be bigger than the US one day. What therefore
One day in the very near future.
How soon?
It's a matter of a handful of years. Depends what you're measuring and how you measure it.
And so what therefore do you think is the motivation for the current US trade war with China, and will it be successful?
I have to take the Fifth Amendment on this, or something like that. It's impossible to anticipate, to guess what the motives are of the current administration, which is what you're asking.
Well, what would the effectiveness be then?
I haven't the faintest idea.
It won't derail Chinese growth. It won't alter the balance of power, which is in a handful of years.
It may supremely irritate them and dislocate a quarter or two. In the long term, of course, this will all be forgotten and it's insignificant. That's the good news.
I'm interested that you're quite so bullish on China in this way, because you were mentioning how important you think demographics are. And China's demographics aren't now as attractive as somewhere like India's. Is that a concern for you?
Well, it depends what you mean by a concern. I consider a slowing growth in population our last best hope. I think if you want to end up as a sustainable world where you protect what's left of your biodiversity, you can't march irresistibly into the future with a growing population, each of us eating more and using up more plastic toys. It simply does not compute. And so I welcome declining populations, and India too will be declining in 50 years.
We've gone through your outlook of US equities. Even where you see value, as a value investor, the most famed value investor, do you still think that those value stocks within the S&P 500 will also underperform in the next 5 years?
I think they'll do less badly, but they're not cheap enough to do well. And you have to be very careful these days with what you mean by value. The old crude measures of value that used to work pre the year 2000 won't necessarily work. There are too many programmed into the computer models, and what edge they used to have, which was decent, has probably gone away. So you have to be very careful how you have to have a broad and complicated and accurate measure of value. And that's not easily done. It used to be you showed up for work, you bought the high yields and the low PEs, and you won. Life was good. And now you can't do that.